Good morning, everyone. Am I audible?
Yes, ma'am.
Yes, ma'am.
How was Dasara for everyone?
Great, ma'am.
Great. Okay, good. So today is going to be your level 2 refresher. Do you want to go topic wise or do you want to randomly ask questions and clear your doubts?
Topic wise, ma'am.
Non-topic ones.
Topic wise. Okay. Before that, does anyone have any questions from level 1 they want to get clarified?
No, ma'am.
No? Okay. Right. So in level 2, the first topic that we started off was with AML KYC, right? So any questions or doubts from that? Yes, no, maybe. No? Absolutely no one has any questions or doubts from AML KYC?
Ma'am, what is orange money?
Orange money. Where did you come up with that?
Ma'am,
that
it was
on the
there on
PPT?
the, yeah.
From what I'm reading here, it's something related to do with online payment, like mobile services and all of that stuff. Like your payment systems, like probably like your Paytm and stuff. Okay. Right. So, why do you think your online payment systems are under the scrutiny of your AML KYC? Hmm? Guys. Okay, is everyone awake? Do you need some more time to wake up?
No, ma'am. Good morning.
Okay, so the question is, orange money is basically that is related to payments that are done through online apps, right? So why would online payment systems like your, let's say, Paytm or PhonePe or Google Pay be under the scrutiny of your AML KYC procedures?
Because illegal money can be transferred through these mediums too, and
Exactly.
the lower amounts are not KYC, like they do not need KYC compliance for lower amounts.
Exactly, right? Okay, so from AML KYC, the probable questions would be what is money laundering, what are the stages of money laundering, and what are the KYC steps or procedures, right? So how do you answer money laundering question? What are the stages of money laundering? How would you answer that question?
Will we answer ways through which no.
Sorry, what was that name?
Ma'am, like, will we answer ways through which a person can make illegal money and stages
Right.
of money?
So I mean, you guys can stick to the answer that we discussed in class, but if you want to make better marks on it, remember I told you guys to research how known money launderers placed, layered, and integrated their money. Did you guys do that classwork or homework? No, right? Only one person said yes, Anupam did it. So the reason why I gave you guys that homework is to better your answer. You can use their methods to explain how would you place, layer, and integrate the money. Is this clear?
Yes, ma'am.
Okay. So the next topic that we did was RDM and exchange trade life cycle. Any questions or doubts from that?
Ma'am, in trade life cycle question, will we have to like answer all these stages only
Yes.
theoretically, or we have to just quote the examples as well?
If you quote the examples, you will get more marks, right? So if I ask you, explain the stages of exchange trade life cycle, then you can use an example of what we taught in class, maybe just change the numbers a bit or change the asset, right?
Okay, ma'am.
And explain stage by stage what happens,
Okay, ma'am.
okay, for both your exchange and OTC. So price factor, Anupam, is you could say it is a factor the client would take into account when he's placing his order with the fund manager or the portfolio manager. So for example, let's say if I was an investor and I tell the fund manager I want to buy Reliance shares, and let's say currently the Reliance shares are trading in the market at, hypothetically, let's say 1,000 rupees per share. So I would say buy the Reliance shares at best price. At best price meaning buy it as low as possible because I'm buying, correct?
Yes, ma'am.
Okay. If I say at limit, that means I'll say I want to buy Reliance shares. The maximum I'll pay is, let's say, maybe 1,100 per share. I won't go above that. Is this clear?
Yes, ma'am.
Okay. Right. And then we have stop loss. Stop loss is basically a hedging strategy. So if you're holding a portfolio of securities, and let's say in the portfolio of my securities, I'm holding Reliance shares, and they're currently, again, let's say trading at a price of 1,000 per share in the market. But let's say there comes an adverse news about Reliance company, they're into some, let's say, whatever bad thing, the share prices are going to fall. So if I've set the stop loss at, let's say, 800 per share, in case if the spot price of Reliance shares falls to 800, automatically my portfolio manager or my fund manager will start selling the Reliance shares in order to protect me from the loss. Is this clear?
Yes, ma'am.
Anupam, sorted? Okay. Monica, please post the questions on the group, this thing, not direct. So the question is, in exchange TLC, in verification stage, it's a mismatch. So this question is incomplete. What is the question? What do you do when if there's a mismatch? Monica?
Sorry, if mismatch, we want to get verified.
So verification stage is an internal process, right? What do we do in verification? We compare the trade sheet versus what we see in the order management or risk management system.
Yes,
Correct.
ma'am.
So let's say, for example, you're seeing the quantity on the system as 1,000, but in the sheet it's saying, let's say, 1,200.
Okay,
Then
ma'am.
what do you do next is you contact the trader who booked that trade,
Yes,
right?
ma'am.
And ask him which is correct. Is the sheet correct or is the system correct? He'll
Okay.
tell you, right?
Okay.
But that has to be a written communication. Is this clear?
Yes, ma'am.
Okay. Next question. Next question. You guys didn't prepare your doubts, questions. I say you joined the class or what? Next question, folks. Come on.
Ma'am, can you explain customer identification process and acceptance process?
Sorry, can you repeat that, Yashika?
Customer identification and acceptance process. Like how
Yeah.
do we explain it when it is asked in the marks?
So let's say hypothetically, I am a person who wants to open up a bank account. So I walk into the bank. The first stage in the KYC process that the bank does is they do customer identification process, where they have to identify who I say I am. So for that, they would ask documents such as a document that will have my photo, my signature, my address, right? So the best possible documentation is to give is the passport, right? Once the government or not government, once the bank identifies who I say I am, then the next step will be the acceptance. Are they willing to accept me as a client? Now, this would depend on whether if there was an adverse news in the market about me. If let's say I'm a big business and I'm involved in some, there's a lawsuit against me or a case against me, so the bank might decide they may not want to onboard me as a client. If they do, then they have to provide proper documentation as what all is required for the onboarding process. Now, depending on what type of account you open, whether it's a salaried account or just a savings account or a business account, the documents will differ. Is this clear?
Yes, ma'am. Ma'am, customer onboarding will be in the start of the process, no?
Yeah, the moment you go into the bank to this thing, they'll start the onboarding process. But before they officially open up the account, they do these necessary checks, right? The
Okay.
CIP and the CAP. Then once they've onboarded you, they have to give you your risk rating based on what type of client you're, right? And then once the risk rating is given, monitoring the account to ensure that we don't use the bank as a front for money laundering or financing of a terrorist activity. All right.
Right. Ma'am, risk rating is done by which department of the bank? Like,
It's
who does it?
done by the AML KYC department.
Okay.
Next question.
Ma'am,
Hmm.
ma'am, could you please explain hedge fund operations once again?
Sure. Let me just pull up the document for it. So you have fund administration, right? So under fund administration, what all happens? So if you're a hedge fund under fund administration, one thing is preparing the reports for publishing it to the stakeholders. Who are the stakeholders? The investors in the hedge fund. Is this clear till you?
Yes, ma'am.
Okay. The next thing that they do is, let me just share my screen. Okay. Then calculating the NAV. You know what is NAV, right?
Yes, ma'am.
Yeah. So obviously the fund's performance needs to be calculated on a day-to-day basis, correct? And that is dependent on what is the total assets minus your total liabilities divided by the number of outstanding units. Is this clear?
Yes, ma'am.
Okay. Then maintaining and filing the fund's financial books and records as a fund accountant. What is financial books and records also you have an idea, correct?
Yes, ma'am.
Yeah. Additionally, what do? You reconcile, because as a hedge fund, you have the prime broker, you have the executing broker, right? Executing broker, what you're reconciling is the trades that you've given them to execute in the market. And then with the prime broker, what you're reconciling is your number of positions and cash. Is this clear?
Yes, ma'am.
Okay. Then if there is any payments related to the funds, this thing that taking care of that, ensuring the settlements of the securities happen. Then if there's any corporate actions, ensuring that is captured correctly, because depending on the corporate action, the value of the securities might go up or down, right?
Yes, ma'am.
Is this clear now?
Ma'am.
Okay. Next question. So switch from trade life cycle to asset management. So I guess we're going random now then, yeah? Right. Next question. Do you guys need some time to go through your notes?
Ma'am, could we do the settlement process like with an example where there's depository, custodian, traders, everybody in the picture?
Are you asking me for an example, or are you saying that you can answer it out?
No, I'm asking for an example just
Okay.
to understand the entire thing in one go.
Sure. So let's say hypothetically, the front office of one investment bank makes a deal to buy, let's say, 1,000 Google shares at a price of $10 each, right? Now, once the front office functions are done, which is it's captured in the order management system, it flows into the enrichment stage where additional details are added for the settlement of of the trade. From there, your details of the trade are sent via Swift to the custodian to notify them that from this particular account, we are going to be buying Google shares, and this is the total amount of money that we are supposed to pay to the counterparty. Are we clear till here?
Yes, ma'am.
Okay. Now, in your pre-settlement stage, we also do pre-matching of the trade details with the counterparty. Why do we do this? To ensure that there is no mismatch in the details, right? If there's a mismatch in the details, it could lead to a failed trade. So in order to avoid the trade being failed, we compare the details with the counterparty to ensure there is no mismatch. What all we compare? We compare the economic and non-economic details. So under your non-economic details, it will be your trade date, settlement date, asset name, SSIs, right? Under your economic details, it would be the price, the commission, the total value of the trade. Are we clear till here?
Yes, ma'am.
Then comes the settlement stage. In the settlement stage, as on settlement date, when the market opens, the custodian would wait for the delivery of the securities from the counterparty's custodian. Once they receive the securities in the depository, then our custodian will release the payment to the counterparty's custodian and the trade has settled. Right?
Okay, ma'am.
Okay. So now the trades can either settle DVP, RVP, or FOP, where in our case, in this example, it's a RVP. We are receiving and we are making a payment. On the counterparty side, it will be a DVP, where they're delivering and receiving a payment. If we set the trade up as an FOP, that means we would first wait for the securities to come in, and after a certain amount of time, we would make the payment on the securities. Is this
So,
clear?
ma'am, the action of custodian depends on the payment type that we are making, either RVP or DVP or FOP, right?
See, custodian will not do anything until you instruct him to do so, right? When we talked about custodian, what was said was this guy is there to safeguard your assets, and he will only do, or rather, let me rephrase that. He will only move the securities of cash if he's instructed to do so. Is this clear?
Okay.
On their own, they won't make a decision. Is this clear to everyone?
Yes, ma'am.
Okay. Now that's your settlement stage. Your post-settlement stage is your fails management. So hypothetically, if let's say our trade doesn't settle on the settlement date, now we would collate a fails report, which will go to our trading desk, which would state the reason why our trade is failing. So in case if all the details are perfectly matching, even the SSIs, if the trade hasn't settled, that means in this example that we gave, the counterparty didn't have enough shares to deliver to us. Is this clear?
Yes, ma'am.
So what
Yes,
we
ma'am.
do, we wait. In case if our front office decides to send a buy-in notice to the counterparty, the middle office will draft it and we forward it to the counterparty, right? So the risk, if the trade doesn't settle, is your buy and sell outs and interest claims. And your lately something called as CSDR regulations. Have you guys heard of this? Yes or no? Guys?
No, ma'am.
Okay. CSDR stands for Central Securities Depository, and the R stands for regulation. So CSDR regulation, or what it means is You guys know what is the European Union, right?
Yes, ma'am.
Yeah. So what is the European Union? What's the European Union? Come on, guys. That much at least you should know, no? Guys, what is European Union? Come on. If you can't answer this question, none of you will get fired.
One union of different states,
Union of different states or countries?
countries.
Where?
In Europe,
In Europe, exactly, right? So European Union makes up a bunch of European countries that have come together, right? For economic reasons, they have merged and formed a European Union. Merged not like their borders, just this thing. So now we have trading that happens in the European market. One of the biggest problems in the OTC market is what?
Default risk, ma'am.
Exactly, default risk, right? OTC market, although you can negotiate on the prices, you know your counterparty, the biggest problem is the default risk, right? Now, if a trade is perfectly matching, the only reason a trade would fail is if the seller doesn't have enough shares or if the buyer doesn't have enough cash. But buyer have not having enough cash is a very rare scenario because the trades are pre-funded, the cash is already locked in. So mostly the trades would fail if the counterparty who's delivering to you doesn't have enough shares. Is this clear to everyone?
yes, ma'am.
Yes, ma'am.
And the
Yes.
reason why this happens is because of that concept of short selling. Remember what is short selling?
Yes,
I
ma'am.
make a deal to sell something even if I'm not holding it with the intention that by the time I have to deliver it, I will acquire the shares to deliver, right?
Yes, ma'am.
So this is causing a huge problem in the OTC market because if short selling happens at the settlement date, they may not have shares to deliver. So in order to reduce that risk, what has happened is the European Union has decided to make buy-ins mandatory. You know what are buy-ins, correct?
Yes, ma'am.
Yeah, it was supposed to come into effect by Jan of last year, but then the market participants asked the European Union to extend the timeline for it. So instead of having mandatory buy-ins now, there are something called as CSDR penalties. So for example, um, your Swiss, not your Swiss, yeah, I think your Swiss market is a CSDR market. What would this mean now is if your trade doesn't settle on settlement date, every day after that, if you don't deliver as a seller, there is a certain amount of penalty charged. Is this clear?
Yes, ma'am.
Okay. Right, Yashika, I hope your question on settlements is answered now.
Yes.
Next question. Guys, next question. Or do you need some time to go through your notes to come up with questions? So either, so there can only be two conclusions I can come up from here is that either you guys have understood everything and you don't have doubts, which is highly unlikely, right? Or you have not understood anything, so you don't know what to ask. So which is it? Option A or B?
Ma'am, give us few minutes.
Okay. Meanwhile, Anupam's question is, how will we present trade life cycle in mock? We answered this earlier, right, in class, Anupam. So if I ask you, explain trade life cycle or exchange trade life cycle, so you take an example of either a futures trade, or you can take an example of the one that we talked about in class, a spot trade, right? Because exchange has your settlements or settlement date standardized, right? And then you explain what happens in initiation, execution, how we did it in class. Is this clear, Anupam?
Ma'am, could you please explain the role of entitlement of shares and bonds?
Sure. Let me just pull up the Excel sheet so it will become a little bit easier to explain it. So, to understand the role of entitlement and the role of receive, we compare your trade date and your actual settlement date versus the X date and the record date. So, what does this mean? When a issuer issues or says, announces that he's going to pay a dividend, he announces what will be the payment date and the record date. And usually, depending on the settlement market, if it's a T+3 settlement, the X date would be the 2 days prior to the record date. If it's a T+2 market, it is 1 day prior to the record date. So what is the importance of all of these dates? Payment date is quite obvious, which would mean on the day the issuer pays the dividend out. Is this clear?
Yes, ma'am.
Okay. What is record date? Record date is the day the issuer would check with the depository who is currently holding their shares. Why? Because they have to make the payment of dividend on the payment date, correct?
Yes, ma'am.
Ex dividend date is required to find out who is entitled for the dividend. Because when the company announces that they're going to pay dividend, most likely what happens is there'll be more buying and selling of the securities in the market. So if people are buying and selling, who is actually entitled for the dividend? Are we clear till here?
Yes, ma'am.
Okay. So now the rule of entitlement on shares is we compare the trade date versus the X date. If the trade date is less than the X date, the buyer is entitled for the shares. I mean, for the dividend. If the trade date is equal to or greater than the X date, then the seller is entitled. Is this clear?
Yes, ma'am.
That is just who is entitled, but who actually receives the dividend would be dependent on the record date, right? So if the actual settlement date, and what is actual settlement date? The day the trade actually settles, because let's say in this example, the actual settlement date was 27th of December, but let's say it settled on 28th of December. That means this is the actual date the trade settled, correct?
Yes, ma'am.
Yeah. So if the actual settlement date is less than equal to the record date, the buyer gets paid the dividend on payment date by the issuer. Is this clear?
Yes, ma'am.
If it is greater than the record date, then the seller would receive the dividends on the payment date. Is this clear to everyone? Okay. Now, if the entitled party and receiving party are the same, there is no issue. Buyer was entitled, buyer got paid the dividend on payment date. Are we sorted with this?
Yes, ma'am.
If the entitled party and the receiving party are different, then it leads to a claim. What type of claim? It depends on what are you or which direction you're taking on the trade. So on this example, you're buying, the seller was entitled, but you received it. So it leads to a payable claim. Okay. Here, you're the seller, you were entitled, but the buyer received it. So it leads to a receivable claim. Is this clear?
Yes, ma'am.
Are we okay with the entitlement on shares?
Yes, ma'am.
On bonds, the rule of entitlement is very simple. If the bond is booked with a positive accrued interest, the buyer is entitled. If it's booked with a negative accrued interest, the seller is entitled. What does positive and negative mean? Positive would mean the accrued interest would be included in the price, meaning it's the dirty price. Is this clear?
Yes, ma'am.
Negative meaning it doesn't include the accrued interest. Is this clear?
Yes, ma'am.
Okay. Now, the rule of receive is same like your shares. If the actual settlement date is less than equal to the record date, the buyer receives the coupon. If the actual settlement date is greater than the record date, then the seller receives the coupon. Is this clear?
Yes, ma'am.
So again, if the entitled party and receiving party are different, it will lead to a claim. Yeah, sorted?
Yes, ma'am. Yes, ma'am. Thank you.
Next question. Next question, folks.
Ma'am, could you explain the role of continuous link settlement bank? Is it the process of the role?
CLS, you mean?
Yes, ma'am. Yes.
Let me put it in an example. Let's say the deal between Morgan Stanley. So we'll put on the details here. Trade date, settlement date, CCY1, CCY2, notional 1, notional 2, exchange rate, and counterparty. Okay, so let's say trade date 6th of October. For settlement, let's say 8th is a Saturday, so we can't use that. 10th of October. Let's say Euro versus USD. Let's say notional. Say exchange rate is 1.4. Notional 2 is this much. And let's say it's with GS. Are we clear till here?
Yes, ma'am.
Now, we use the CLS bank to settle your FX trades. So what does this mean? Morgan Stanley will have an account at CLS bank. So would Goldman. Is this clear till here?
Yes, ma'am.
Now, in order to facilitate this FX trade, where we forgot the direction, the most important bit, right? So direction, let's say sell EUR by USD. Okay. So in order to facilitate this trade, which is you're going to, Morgan is going to sell EUR. So in his CLS account, he has to make sure that he has that 1 million EUR maintained. Is this clear?
Yes, ma'am.
Subsequently, GS has to ensure that they have the 1,400,000 USD. Is this clear?
Yes.
Now, only if they have maintained this amount of cash will the CLS bank allow this transaction to happen. Is this clear now?
Yes, ma'am.
Okay, versus them directly transferring, because it depends on the, like the example that I gave you. The reason why CLS was created was because of what happened a couple of years ago with a German bank versus a US bank. Because of the time zone difference, the US bank had made the payment, but the German bank didn't make the payment, which left the US bank out so much of money, which caused a lot of problems. Is this clear?
Yes, ma'am. So, ma'am, if we want to maintain an account with CLS,
Mhm.
how do we transfer the funds to CLS? Like, what is the method? Like
You would use a
RTGS or
payment
chips,
system.
taps?
You can
Okay.
use chips, and you won't use chips. Oh yeah, you can use chips. You won't use Fedwire because that is just within the US, right? So you
Yeah,
can
yeah,
use
yeah.
chips, chaps, Target.
Okay. Yeah.
Ma'am, in Swift message types, it is necessary for us to know all the message types.
No, I'm not going to ask you all of them.
Okay, ma'am.
Okay. Right. So there's a slight change in your mock schedule. I think I told you guys it would be from the 11 to 13, right?
Yes, ma'am.
It's going to be from 10 to 12, okay? And maybe I'll be publishing the schedule today.
Okay, ma'am.
Okay, ma'am.
Right. Next questions or doubts?
Ma'am, could we do a custodian reconciliation? The one that you explained that day with the example.
So let me put it this way. Let's say Goldman is the ID. Okay, let's say we have, what's wrong with me today? Client A. And let's say client A is using custodian State Street Bank, right? So they would have an account for client A at the custodian bank as well, right? Agreed?
Yes, ma'am.
Okay. So let's say in terms of securities, client A is holding 100 Google shares. Let's say they're holding 1,000 Amazon shares. And let's say they're holding 500. And these are really small quantities. In actual reality, it will be like in 100,000 or in millions. Okay. It's just, this is a small example. And let's say they're holding 500 metaverse shares. So if this is what we are reflecting for the client on our side, the same number of positions should be reflected on the custodian side as well, right?
Right.
Yeah. So when we reconcile the positions of our client versus what the custodian sees for the same client, it's referred to as a depot reconciliation, in other words. Is this clear?
Yes, ma'am.
Okay. Sometimes when we reconcile, let's say this is the scenario. When we reconcile, let's say we are reflecting 100 Google shares. One second. So let's say when you're doing the depot reconciliation, on your side, you're reflecting 100, but on this guy's side, it's 150. This would lead to, or rather, this is referred to as a break. Are we clear till here?
Yes, ma'am.
Okay. So when there is a break, it needs to be investigated. Now, first, what you would check to see on your side, is there a buy of 50 Google shares on this account, on client A's account, right? If it's there, it might have settled. That's why this guy is reflecting 150 and we are only showing 100. Is this clear?
Yes, ma'am.
Okay, that could be one reason. Another reason could be this guy doesn't just have this guy as a client, right?
Yeah.
He would have multiple clients, but at the depository, he will maybe just have one depository account. So every client shares are all kept at one depository account. Are you following what I'm saying?
Yes, ma'am. But how
Hang on.
will all the clients, like the shares of all the clients, get clubbed into a single listing?
It can be stored at the depository in one account. Then it's the custodian's responsibility to segregate the positions. He should have an
Okay.
accurate account of which client is holding what shares. Is this clear?
Yes, ma'am. Now.
Okay. So what could happen is that 50 Google shares might be actually some other's clients, but by mistake, he's reflecting it on your account. Right?
Yes, ma'am.
Then he'll have to fix it on his side. Just give me a second. Okay. So that could be the possible reasons why there might be a break in the number of positions. Is this clear to everyone?
Yes, ma'am.
Okay. Now, the other bit of it is, let's say hypothetically client is having 1 million US dollars. Let's say having 2 million euros And let's say it's having about 5 million GBP. Right? The same thing needs to be reflected here as well. So when you're reconciling the cash with the custodian, this is referred to as nostro reconciliation. Is this clear?
Yes, ma'am.
Okay. Now, if there is a mismatch, which is also called as a nostro break, to be more specific. Okay. Let's say this is showing 1 million. This one is, let's say, showing 2 million. Right? There's a mismatch. What could be the reason? Maybe there's a sell trade that settled. So the custodian has received cash, correct?
Yes, yes,
Yeah.
ma'am.
So he's reflecting it on his side, but we are not reflecting it on our side. So we'll have to correct that. Is this clear?
Yes, ma'am.
Yeah. Sometimes trades can settle with different amounts, but then again, the system itself shouldn't have allowed it to settle. If there's a difference of, usually from way back when I was doing it, if there's a difference of like up to $500, it would settle in the market. For example, let's say if we did a buy trade of a total of, let's say, I'll keep it simple, 1 million, right? And let's say it's settled, or rather on the counterparty side, they were showing, let's say, 1,010,000, which is a huge difference. Then this won't settle because there's a mismatch in the cash, right?
Yes, ma'am.
Yeah. If, let's say, if it was the counterparty showing 1 million, this will settle because this $50 difference is less than 500, right?
Yes, ma'am. Ma'am, what would cause such difference?
Maybe there's a decimal rounding off, or maybe there is a very slight change in the price that has been agreed. It could be various reasons.
Okay, okay.
Okay. Are we clear with what is custodian reconciliation now?
Yes, ma'am.
Okay. Next question. Next question, folks. So for your level 2 mocks, there will be questions from level 1, right? There will be 2 questions. One question will come from the first 4 topics, which is financial systems, cash equity, fixed income, and money market. And one questions will come from the derivatives bit. Is this clear to everyone?
Yes, ma'am.
Yeah. So if you don't answer those level 1 questions, and then don't give me excuses saying that, oh, it's level 2, we thought only level 2 questions. That's not going to fly, because I've already told you clearly that there will be questions from level 1. And please understand, if you don't answer those questions, you'll get a 0, which will then affect your overall score. Is this clear to everyone?
Yes, ma'am.
Yeah. Then from your level 2, one definite question is from your trade life cycle, right? One question will be from your AML KYC. One question will be from your settlements. One question from reconciliation. One question from corporate action. One question from stock borrow lending. One question from your asset management. Is this clear?
Yes, ma'am.
Yes, ma'am.
Yeah. So level 2, all topics, one question will come. From your level 1, 2 questions. Like I said, one will be from the first 4 topics and one will be from the next 4 topics of your level 1. Is this clear to everyone?
Yes, ma'am.
Yes, ma'am.
Please at least try to give the definition so that at least you get a pass mark, right? Is this clear?
Yes, ma'am.
Yes, ma'am.
Okay, right. What's the doubt or question?
How many minutes will be there for Mark 2, ma'am? For Mark 1, 20 minutes.
Same, 20 minutes.
Okay, ma'am.
20 minutes is more than sufficient for me to gauge if you guys will answer well or not. Right?
Ma'am, in case of derivatives, like will we have to answer with the example, like explain what derivatives is, what type of derivative are we talking about, and then quote an example?
Yes, see, basically, if you want to score better marks on your this thing, then you have to elaborate more, right?
Okay.
Okay, if you just want the pass mark, for example, if I'm going to ask you, explain what is a long call option, right? You can
Acha, okay, that one.
you can stick to the definition by saying that it's where the holder of the option has the right but no obligation to buy the underlier at agreed strike and agreed price with the payment of premium, right? You give me that definition where everything is correct, the terminology, the structure, you'll just get a 3, which is just the pass mark, right?
Yes, ma'am.
Yeah. If you then back it up by saying, let's say a long call is an option where it's, if you define it, if you have to define it, it is where the holder, meaning the buyer of the option contract, has the right to buy the underlier at an agreed strike at a future date with the payment of premium. Where, let's say, if I was a holder of the option and I'm speculating that the underlies prices might go bullish in the market, so I would enter into a long call option. So let's say hypothetically I enter into a long call option at a strike of 200 and the premium is, let's say, 40. Then I would be out the money when the spot price is less than the strike price, because here I would expire my option contract and buy from the market. Thereby, I will just lose the premium of 40, which I pay to the writer. Now, if the spot price is greater than the strike price, then I would be in the money, because now I would exercise my option contract and buy the underlier at strike. So in this case, in my example, if my strike was 200, if the spot price goes above 200, then I would exercise my option contract, right? I would be at the money where I make no profit, no loss. In my example, it would be at 240, because at 240, I don't make a profit or don't make a loss on my option contract. Are we clear now how to explain?
Yes, ma'am. Yes,
Yeah.
ma'am. Everything came into the picture with this
Okay,
example.
so that is how you need to answer. Like I said, guys, to just pass the mock, you give me the definition. The definition is correct. It is structured properly. The terminologies are correct. You will get just a pass mark. But if you elaborate your answers, and when you elaborate, if you get the terminologies right, the definition right, you make slight mistakes in your explanations, you'll get a little bit better marks, right? If you explain it like nicely without any mistakes at all, and it's structured properly, it's articulated properly, you'll get better, much better marks. Is this clear? Most of you have given your feedback when I did your level 1, right?
Yes, ma'am.
Yeah.
Yes, ma'am.
So you know what to do in order to better your marks for your level 2. Agreed?
Yes,
Yeah.
ma'am.
If you have done the required work in order to improve your marks, it will improve. Sorry, guys, just give me a second. Ashwini, yes, only 2 questions from level 1. I'm not going to tell you which 2 questions though. Okay. Right. Next question. Next question, folks. Anupam, you don't have to, time is not less. If you guys, as per what I told you at the beginning of the course, have revised every day, right? Time is not less. Is this clear? Right. Next question, order.
Ma'am, could we go through mandatory plus voluntary corporate action? Ma'am? Like in short.
So, when you talk about corporate actions, it's an event that is undertaken by an issuer that may directly or indirectly affect the position holder. Who's the position holder? Your shareholders and your bondholders, right? So we have a bunch of mandatory corporate actions that the issuer might undertake, where now the position holder doesn't have a choice. He has to take part in the corporate action event. So let's say, for example, if the position holder is, or rather if the issuer says that I'm going to change the name of my company, then as a position holder, automatically that will affect our share name. It will just change and the identifiers will change, but the value of the securities doesn't change. So this could be classified as an indirect impact. If let's say the issuer says that I'm going to do a stock split, where he decides to increase the number of outstanding shares in order to increase the liquidity of the shares in the market, which would then change the value of the shares. So in a stock split, usually the number of outstanding shares would increase and the share price would decrease. So this would have a direct impact. Is this clear?
Yes, ma'am.
Okay. Then we have voluntary corporate actions, where here the position holder can decide if they want to take part in the corporate action event or not. An example could be a buyback. If an issuer decides that they want to buy back some shares from its position holder, they would announce a buyback corporate action where they would say they're offering, let's say, a premium to the market price of the share that the shareholder is holding. And if the position holder wants to take part in the corporate action, they can say yes. Or if they don't want to take part in the corporate action, they can say no. Are we clear with this?
Yes, ma'am. Ma'am, that's Dutch auction.
Dutch auction is where they give you a price band. So I was specific. I said buyback, where I said is they'll mention a premium to the market price. Right?
Okay, okay.
Then you have your mandatory plus choice corporate action, where it is the event is still mandatory to the position holder, but they get to choose which election they want. For example, if the issuer announces they want to do a cash or stock dividend, as a position holder, we need to choose whether we want cash dividend or whether we want stock dividend. If we don't make a choice, automatically a default is set to for us. So the corporate action is still mandatory, but we get to choose the election. Is this clear?
Yes.
Right. Next question. Next question, folks. Shreyas, you there? Shreyas, you there? Okay, Shreyas is not answering. Vijendra, you there? Vijendra? Right, guys, next questions, doubts, come on. Or you need some time to go through your notes. Am I audible?
Yes, ma'am.
Okay. Okay, how about this? You ask me questions, I will answer. We'll do role reversal.
Yes, ma'am.
Does that
Yes.
sound better?
Ma'am, what is collateral TLC, like trade life cycle? Could you explain that?
Collateral trade life cycle?
No, sorry, ma'am. Corporate trade life cycle.
Corporate
Sorry.
action. Okay, so
Yes,
if this question is asked to you, the life cycle of a corporate action event starts with the announcement stage, where, let's say, for example, company A makes an announcement that they're going to do a mandatory plus choice corporate action, let's say a cash or stock dividend, where they, let's say, announce for every share that you hold, they'll give you one more share, or maybe for every share that you hold, hypothetically, let's say they'll give you $5 as dividend. Now, when they make the announcement, they'll make the announcement of the payment date, the record date, the ex-dividend date as well. That's the second stage of your corporate action life cycle is your, was it validation? I also keep getting confused. Just a
Yes,
second.
ma'am.
The validation stage would include your depository. The reason because all your securities are ultimately stored at the depository, either in physical or demat form, but most currently now in demat form. So depository would have the record of who is the current position holder on these shares. Once the validation stage is done, the next stage is your verification stage, where your custodian gets involved, because your custodian is the one on behalf of the clients would make the election or take the client's election choice and pass it on to the depository or the issuer. So now the custodian would inspect their books to see which all clients are holding these companies' shares. So once that is found out, the next stage is the election stage, where they'll reach out to these respective clients and ask them which election they would like to choose. Do they want to choose cash or do they want to choose stock? Once the election stage is done, it comes the settlement stage. So based on the client's election, if the client has elected for stock, they would collect stock from the depository. If the client has decided to go for cash, they would collect the cash from the issuer. If the client has not made a choice and the default is set as, let's say, cash, they'll collect the cash from the issuer. And the final stage is the confirmation stage, where now once the custodian has collected the election on behalf of the clients, they'll inform the clients that they have collected the elections from the depository or the issuer. Is this clear?
Yes, ma'am. Thank you.
Okay. Next question. Right, next question, folks.
Ma'am, what are the risks if trade fails?
The risk if trade fails are buy-ins, sellouts, and interest claims. So let's say, for example, there's a buy trade between Morgan Stanley and Goldman Sachs, where Morgan Stanley has agreed to buy, let's say, 1,000 shares for a total of, let's say, $10,000. And let's say the settlement date is today, 6th of October. Now, as the market opens, if Goldman has not delivered the shares to Morgan Stanley, then from 7th onwards, this trade is called as a failed trade. Now, Morgan Stanley might wait for a couple of days for Goldman to deliver these shares. If they don't deliver these shares, they would issue a buy-in notice, where in the buy-in notice, it will notify Goldman Sachs that they have not delivered these shares. They have a deadline date of, let's say, maybe the 15th of October to deliver the shares. If they still don't deliver the shares as of 15th, then Morgan Stanley would go buy the shares in the market from another seller. And if they pay higher than the agreed price, then Goldman would have to pay them the difference, which is a buy notice. The opposite of that is a sellout notice. If, let's say, Morgan Stanley fails to take the shares in when GS is trying to deliver the shares, then the GS might send them a sellout notice notifying them to take in the shares by a deadline date. If they don't, then they'll sell the shares in the market. And if they sell less than the agreed price, then Morgan will have to pay them the difference. So that's your buy in and sellout. Sometimes what could happen, a trade could fail for a few days. And once it's settled, the seller might file an interest claim for the loss of interest he would have earned on the amount of money he would have received if the trade settled on the settlement date. Is this clear?
Yes.
For the question, why, if risk if a trade fails, for that question, we have to only answer the 5 pointers, or we have to explain each one by one?
Again, Snake, if you just give me the pointers, you will just get 3 marks, right? Like, what are the risk in settlements, buy in, sell out, this thing, that also I won't give you 3 marks there, because there should be at least a one-liner definition of what that is, right?
Okay, ma'am.
Now, if you explain it like what I said, where you gave an example, right?
Hmm.
Then
Yes,
you'll get
ma'am.
better marks.
Okay, ma'am.
Right. Next question. Explain FATF. FATF stands for Financial Actions Task Force, which is the global body that is responsible for publishing recommendations on how to combat money laundering and financing of terrorist activities. It was formed in 1989 during the G7 summit. So FATF has published 40 recommendations, and one such recommendation is that every country should have its own financial intelligence unit that will be responsible for the domestic cases on money laundering and financing of terrorist activities. And additionally, they also have a recommendation on your KYC procedure. They publish the KYC procedure for banks to follow in order to ensure that the clients that the banks are onboarding will not use the banks as a front to launder money or finance a terrorist activity. Right? And there are a couple of other points that were mentioned as well as the functions of FATF. Right, Anup? Is this clear? Okay. Next question. I won't ask you, you will have to tell me the points, no, Anupam. It's not a multiple choice question where I ask what is FATF. A, it's an organization for combating money laundering or financing a terrorist activity. B, it's not going to be like that, right? Is this clear? Okay. So, no, you don't have to tell all those 40 recommendations, just one or two, right? Just give me a second. Okay. So, structure of a hedge fund. So the first person that gets involved is the fund manager or the portfolio manager who's also invested in the fund, right? He's the one who makes the strategies and investment decisions, manages the portfolio's risk. His advantage is he gets management fee and he gets something called as the performance fee, right? Are we clear till here, Yashika?
Yes.
Then we have prime brokers. Prime brokers act like custodians to the hedge funds. So they are the ones who store the securities of the investors in the hedge funds and the money. They help in your settling of clearing of transactions, or it also might help the hedge fund borrow cash or securities for the trading. Is this clear?
Yes.
Okay. Then you have executing broker. So what does the hedge fund do? If they place an order or make an agreement with a counterparty, the executing broker will ensure that this deal is recorded and they match the details of the trade, etc. That's basically your trade life cycle, right?
Yes. Sir.
Are we clear with prime broker and executing broker? Yes or no? Yashika, are we clear with prime broker and executing?
Yes. Yes.
Yeah.
Yes.
And then we have auditors. Auditors are required because since your hedge funds is not as highly regulated as your mutual funds, regulator wants the hedge funds to publish their financial statements and the transparency of where they're investing their clients' money in the market. Is this clear? So the auditors would audit the hedge funds, see if all their statements and all are accurate. If it is inaccurate, then they would inform the regulators.
Ma'am, in case of auditors, like in any hedge funds, the auditors are fixed for a period or they keep changing.
They can change.
Okay.
They are not a part of the hedge funds, the auditors. They're external.
Okay. Okay.
Okay. Right. Next question. Next question. Or do you guys want to go for a break and come back? Guys,
Yes, ma'am.
break.
Yes, ma'am.
Okay. So is everyone back?
Yes.
Okay, let's continue then. What all questions or doubts? Anything else? Guys, questions or doubts? Come on.
Ma'am, could you explain types of collateral and lender's fee?
So when the lender charges a rental fee, he'll take a couple of things into consideration, right? So first off, he'll see the borrower's credit rating. If the borrower's credit rating is low, the rental fee that will be charged is higher and vice versa. Is this clear? Next, he'll check if what type of collateral the borrower is giving. If the value of collateral is very high compared to the value of the securities that is loaned, he might charge a lower rental fee and vice versa. Is this clear to you?
Yes, ma'am.
Then it depends on whether the contract is an open contract or a fixed contract. An open contract, they'll charge more rental fee. On a fixed contract, they'll charge a lesser rental fee. Now, when the borrower posts collateral, if he gives non-cash collateral, then usually the lender would just charge a rental fee, which will be denoted in basis points, and it will be on the value of the securities that is loaned. If the borrower posts cash collateral, then the lender would reinvest that cash in short-term, highly liquid instruments like your money market instruments. And the return he makes on that, a part of that has to be rebated back to the borrower, which will be called as a rebate rate. In practicality or in actually in the market, what the lender usually does is he'll deduct the rebate interest from the reinvestment rate, and that the remaining will be the rental fee he would charge on the value of the securities that he loans. Is this clear?
Yes, ma'am.
Next question. So NAV is net asset value. You don't have to go in the complicated explanation. So simple. It's the total assets of the entity minus the total liabilities divided by the number of outstanding units. So NAV is usually used, or NAV calculation is usually done for your mutual funds and your hedge funds. Is this clear? Darren, is this clear? Next question. Satya, we covered what is direct and indirect effect at the beginning of the class, no? When Ashika asked how to explain corporate actions. So corporate actions is an event undertaken by the issuer where it may directly or indirectly affect the position holder. What is your direct impact? If the value of the positions changes in the market, then that is called as a direct impact. If the value of the position doesn't change, then it's called as an indirect impact. For example, change of name of securities would be an indirect impact because the value of the securities doesn't change. Whereas a reverse stock split or stock split will be a direct impact because the value of the securities will increase or decrease in the market. Is this clear? Next question. So the hedge fund can get set up in 3 ways. We have the single structure where they set up the fund only in one domestic market. Then we have the side by side, or it's also called as fund of fund structure, where one feeder would be set up domestically and one in an offshore country, usually a tax haven country. And then you have the master feeder, where you have multiple feeder funds where they'll be set up in different countries, where the investment decisions will be taken in the master fund, and all the profit and loss that happens in the feeder funds get fed into the master fund. Okay, Darren?
Ma'am, in different countries, but of the same security, right?
Yeah, like let's say if I have a master feeder structure where my feeders are one in the US, one in the UK, one in, let's say, Switzerland, right? Then if the investment decision by the master fund is taken that it's only going to invest in large cap companies, then that same investment decision will be deployed in the US, UK, and the Swiss market.
Okay.
Next question. Yeah, Ashika, we covered the stages of money laundering, na? Your placement, layering, and integrating. Right? So if you have to explain it, you could say, let's say if you earned illegal money, then if I want to convert it into legal or clean money, the usual or common stages it goes through is placement, layering, and integrating. In placement, what we usually do is break down the illegal money into smaller funds, and we either do blending of funds, or we do smurfing, or we do those remaining stages that we talked about in placing, right? And then how you integrate, and I mean how you layer and integrate. Is this clear? Okay. So Ajay, the SPL, this thing is, there is only one rule of entitlement, that is the lender is always entitled. Are we clear with this?
Yes, ma'am.
Okay. The rule of receive, there's only one scenario where the lender would receive. That is if the end date or the close date or the settlement date of the SBL trade is less than the record date. In any other scenario, it's the borrower who would receive. Is this clear?
Yes, ma'am.
Next question or doubt? Next question or doubt? Next question or doubt, folks? Guys, any more questions or doubts? Okay, Anupam, no questions or doubts. Anyone else? No, Pragati also said no.
No, ma'am.
Ma'am, October 3 recording was not in LMS.
I've
and how to do-
already escalated it to the governance. I'll follow up. Hopefully it should be done by today evening, okay?
Okay, ma'am.
Was the fourth recording uploaded? Guys, fourth recording was uploaded, yes or no?
Ma'am, October 4 was done, ma'am. October 3 was
Third,
not done.
okay. Third was not done. Okay. I'll follow. I've already escalated. I'll follow up with them. Yeah. ASD's actual settlement date, Darren, we discussed this, no? What is actual settlement date? If the trade doesn't settle on settlement date, then the date actually settles will be called as actual settlement date. For example, if we have settlement date on a trade for today, 6th of October, and it doesn't settle, and let's say it settles on 8th or let's say 10th of October, then 10th of October would be considered as the actual settlement date. Is this clear?
Yes, ma'am.
Right.
Ma'am, Now the level 1 marks are still not showing on the Pegasus. They are not available.
Let me check on that as well. Any
Yes.
other issues? Just give me a second. So level 1 mocks are not there on Pegasus yet, is it?
Yes, ma'am.
Okay, I'll check with that. Satya, the time slots will be published today for the mocks. Any other questions or doubts?
No, ma'am.
Right. Adi, any questions or doubts? Adi Shankar, you there? Right. Ajay, any questions or doubts?
No, ma'am.
Okay. Ashwini, any questions or doubts? No. Bharat? Bharat, you there?
No, ma'am.
Okay. Darren? Darren, any questions or doubts? No. Jay?
Yes, ma'am.
Any questions or doubts?
No, ma'am.
Joycelana?
No, ma'am.
Monica?
No, ma'am.
Maunika?
No, ma'am.
Nalina? Nalina, you there? Nitya? Nitya, are you there? Nitish? No. Pavitra?
No, ma'am.
Okay. Rashita? Satya?
No, ma'am.
Shivam?
No, ma'am.
Shreyas? Shreyas, any questions or doubts? Simpu?
No, ma'am.
Sneh?
No, ma'am.
Sonali?
No doubts, ma'am.
Srinath? Srinath, you there? No? Okay. Shrishti? Shrishti, you there? Tanu? Tanu, are you there? Okay. Vijendra? Looks like these people have just on the recording and gone, right? Yamuna? Can't hear you, Yamuna. Yashika? No? Okay. All right then. If there is no questions and doubts, can we wind up then?
Yes, ma'am.
Yeah?
Yes,
Okay.
ma'am.
So make sure you go through all your notes, the recording, start preparing. I'll publish the slot by end of today with the link. Okay?
Okay, ma'am.
Okay, then good luck. See you guys on Monday for the mocks. Okay?
Thank you, ma'am.
Thank you.
Thank you, ma'am.
Thank you, ma'am.